This is a quick video to describe the value of calculating the initial balance and the standard deviations off of it. Now, what we have on our screen is an indicator that will plot the initial balance for us. Let's explain that first. The initial balance is very simple. All that it is the high and low of the first hour of trading. That's it. The high and the low of the first hour of trading. So this is a 30-minute bar. So 2 bars into it, we can find out what our high and our low is. Okay, over here, over here, over here. And then what we do is calculate one standard deviation above and below the initial balance levels. So one standard deviation above today puts us here. 2 standard deviations puts us here. 1 standard deviation below puts us here. 2 standard deviations below puts us there. Now, of what value is that? Well, you might be interested in knowing the probability that the first standard deviation level will be reached on any particular day. And we keep tabs of this. So I'm going to show you a little chart here that's going to answer that question for us. Now, we've been running this since 2017. And what this tells us is that on any day of the week, the probability that the first standard deviation level will be reached is over 70%. Now, here in 2021, Wednesdays were not so good. But overall, as you can see, 73%, 72%, 78%, 86%. So when you've got that kind of data and you're trading on a Thursday, the probability that that first standard deviation mark is going to be hit is extremely high. So this may give you a basis for determining what days you're going to hold a trade a little bit longer. Now, a couple of other things are evident too. Last year, almost 4 days out of every week, the first standard deviation mark was met. But at least 3 days out of the week was the average, almost 4. So what does that tell you? If on Monday you failed to reach the first standard deviation mark, and on Tuesday you failed to reach the first standard deviation mark, then Wednesday, Thursday, and Friday, in all probability, you will. So however many days you failed gives a much higher probability that the following day is going to hit the mark. Okay? If you failed to hit it on Monday and Tuesday and Wednesday, or in other words, 3 days out of the week, the probability that the remaining 2 days will hit the mark is virtually certain. Okay? Get the idea? This is a very, very useful piece of information. Now, what about the second standard deviation mark? Well, we kept records only from 2023. Mondays was the worst day. Wednesdays and Thursdays were the best days. On both Wednesday and Thursday, you had a 50-50 chance that the second standard deviation mark would be reached. And on the average, at least 2 days out of the week, on the average, you would hit the second standard deviation mark. So let's just suppose you're trading Friday, and thus far, no day in the week hit the second standard deviation mark. Then Friday is almost a certainty that it will. Get the picture? You can anticipate the probability that way. So the average week, 2 days out of the week, hit the second standard deviation mark. There was a 43% chance in any given week that 3 days out of the week, 3 days out of the week, would reach the second standard deviation mark. But only a 6% chance that 4 days. And there were no instances where all 5 days hit the standard deviation mark. The second standard deviation mark. So again, you can play the game, the probability game. If Monday you failed and Tuesday you succeeded and Wednesday you failed, then what's the probability that you're going to hit the second standard deviation mark on Thursday? It's a good 50% chance. And in fact, it's really, really better than that. But if you failed on Thursday, then on Friday, it's a virtual certainty. So with having that information can be very, very useful. All you have to do is you have to have an indicator or you run the calculation manually. But now I have on good authority that there's a certain individual by the name of Joe at Trading Alchemy who may be creating a standard deviation indicator for us that will automatically calculate the historical probability that the first or second standard deviation mark will be hit. And he'll put that right up on the screen for you. So if that in fact takes place, and I got a feeling it will, you'll be able to purchase an indicator that'll give you that statistical information for you to display right on the screen. Very, very useful. Now let's just talk about pattern for a second, just with what we have on the screen here.